Hi, I'm Arish Shah, host of the Nothing Ventured podcast. As a CFO that has operated in the startup and scale-up ecosystem for the last decade, and as a founder myself, I found it absolutely essential to learn from those that have come before me. So this podcast is an exploration of the people, the characters, the stories, and the narratives that make the venture ecosystem go round. From emerging fund managers to established VCs, from angel investors to founders, I chat to people that make the tech ecosystem thrive. Please remember to like, rate, and subscribe to the podcast because it really helps with our discoverability. And in the meantime, I hope you enjoy the pod. Hello and welcome to another episode of Nothing Ventured with me, Arish Shah. Today, I was really excited to have with me Toyosi Ogedengbe. Toyosi is a principal at Ascension Ventures, an early stage VC built by exited entrepreneurs to back the next generation of tech and impact founders. Prior to Ascension, Toyosi was a VC investor at Speedinvest with a focus on marketplaces. In today's episode, we talked about his affinity for marketplaces, how tech has been the leveler for Africa, and the fact that the world's tolerance for failure as an underrepresented founder is much lower, as well as why and how you should leverage your network. Let's get straight into it. Toyosi, it's really great to have you in the studio with me here today. Looking forward to talking about quite a lot of interesting stuff.
Absolutely.
Amazing. So let's dive straight in. So look, we've previously had Samir Singh on the podcast talking about marketplaces, network effects, but I'd love to understand from you why you have such an affinity for kind of this business model. And you know, as you said in the primer, the three kind of companies you called out were very much marketplace businesses, and you have built in the marketplace space yourself. So yeah, I guess that almost answers the question, but I'd really love to understand from you kind of what it is that you love about that space.
Yeah, no, absolutely. So let me take a step back. And actually, to be honest, I kind of fell into it, if I'm being honest. So when I joined Speedinvest, I did a retro in terms of looking back on what I'd done in the tech space generally. And it was then that I realized that all the companies that I was attracted to or I thought were interesting just happened to be marketplaces. And then you're absolutely right. I was trying to build one previously. And then one of my angel investments was an e-commerce fashion business back in Nigeria. And so I think when I looked back on all of that, I was like, all right, so clearly this is a thing and I should just double down on it. So that's piece number one. But actually, when I think about the marketplace business model and what is it that actually attracts me, it's a number of things. So first of all, they're extremely difficult to build. Now, when we think about tech and defensibility and like what is the USP, what is the competitive advantage about any product, how do you win against the competition? One of the data points, and even if you look at all the big companies, whether it's Apple or whether it's Amazon, Facebook, and so on, most of the value of the biggest companies in the world actually comes from something called network effects.
Sure.
Now, and I know Samir is probably going to criticize me for this if I get it wrong, so I just need to make sure I get it right. But a marketplace is a type of network effect, but it's not necessarily the only network effect.
Yeah.
Now, if you think Airbnb, you think Uber.
I mean, Facebook is not a marketplace.
Correct, exactly. But it has strong network effects. But it's a social network. Yeah. And just for the audience who are listening, a network effect is just simply every time you add an additional participant to the ecosystem, it creates more value for the overall, or the value that comes to the overall ecosystem is more. It increases. Yeah. Effectively, that's it. Yeah. And so I really like the fact that they're difficult to build because that in itself
that's the moat.
That's the moat, right? So that's number one. I think marketplaces particularly, and I prefer B2B ones because I think, first of all, the amount of transaction size of a B2B marketplace versus B2C. So think a sender as an example, which is interestingly enough a digital freight forwarder versus a Netflix or a Deliveroo. If you think about the basket sizes or the transaction sizes, it's like chalk and cheese. Also, they're a lot more profitable. Now,
And sticky, I would argue
And
as well,
sticky.
right? Because
Well-
businesses tend not to move as quickly
There you go.
once they've bought in.
Exactly. So that's why it's B2B marketplaces that is my preference. That said, and if you think about any marketplace, one of the things that founders often make a mistake on is they don't, to your point about stickiness, they see the marketplace growing in volume, GMV revenue, etc. But actually, it depends what's happening under the hood. Are people coming back, or are you getting more and more and more and more people?
Yeah, it's a whole kind of argument: is retention more valuable than growth?
Exactly.
Or how do you manage kind of that trade-off? And I like my argument again as a CFO in most businesses that I've worked with that have been marketplaces. I've always argued that retention is actually far more valuable than just continuously trying to add new customers, because you tend to see better value. You tend to see that they are the advocates for your business. You tend to see that they'll actually provide you the most value in terms of feedback, and they will stay with you for a long period. Whereas especially if you are acquiring, and I hate the term acquiring customers, but if you are acquiring customers using digital acquisition techniques or even discounts or anything like that, then often what you do is you bring someone on, they use their discount, and then they drop off immediately.
Exactly.
Right?
Exactly. And I guess to wrap it up, the final reason why I picked marketplaces as my thing, or why it's of interest, is not many people out there actually understand marketplaces, in my view. Very subjective view, but I think there are very, very few people who understand the dynamics of marketplaces and network effects. And so if you remember, I said earlier that I get bored easily. So I still want the broad view in terms of like industries, right? And so in venture, you kind of have to specialize in something. It's just a thing. Like, what's your brand, right?
Yeah, it's either the vertical or it's a business model.
Or it's a business model, correct. And so I picked the marketplace business model, but actually it's more broader. It's like more like network effects. And because there aren't many people in that, and there's actually, there are technicalities to that. And obviously Samir is a great advocate for that space. I think learning about it and understanding it and actually being able to add value to companies, especially those who don't understand the dynamics of how that works. And given that builds a lot of the value for companies generally, with the example that I gave with the likes of the big five, basically, in terms of the big tech, I think that companies could do more to add network effects into their business models. And so it makes me an asset.
Yeah, no, that's super interesting, because I think I'd agree. Again, a lot of the marketplaces that I've seen or have worked with either had not internalized the value of those network effects, or didn't know how to generate those network effects, right? Or build the business in a way that those network effects, to your point, as Samir, I think, would describe it, each additional node adds value to the whole network. And actually that's the hack, right? If you can get that right, then presumably you create the moat that allows you to scale, and you scale exponentially rather than linearly. It is a very hard concept to grok, right? Because I remember having this conversation with Samir, and I was like, oh, okay, well, this is an example of network. He's like, no, not really. Like, virality is kind of a type of, but it doesn't necessarily lead to network effects, right? So I think people have a very, very sort of basic understanding, and to really kind of grasp what it means to have true network effects, you've got to study businesses that have really done well in channeling those network effects, whether it's things like Airbnb, whether it's things like Facebook, and looking at the materials that are out there by funds like NFX, for example, right, who've written a huge amount on the topic. But that's really interesting, and I think, it makes a lot of sense, right? Like you pick your lane and you become an expert in that. So exactly. Yes, you are a generalist, but you've obviously specialized in something, and I think there is something to be said for specialist generalists, because it adds a lot of value, because you are able to talk very well about the specific whilst also bringing the broader perspective.
Absolutely.
So just sort of switching tack for a second. There's an article by Tech Cabal back in 2022, which listed 22 things that happened for the first time in Africa in the tech scene in 2022 itself. And that included things like Nigeria and the DRC having startup acts, so legislation. The Central African Republic adopted Bitcoin as legal tender. And last year, there was over $4 billion of venture capital raised into startups. So you've been investing in Africa and Africa tech for some time now. What is it that excites you most about what's happening on the continent today, and where do you see it going?
It's a good question. How long do we have? I'm just kidding. So first of all, I think if we look at the world and we look at where the growth is happening, generally speaking, you'd find that it's probably in emerging markets, just generally as a broad brush. Now, if you look at those emerging markets, and I'm being very generalist at the moment, from a continental perspective, a large piece of that is actually coming from Africa. And then when you dig deeper on the African continent, there are a few things in terms of dynamics that you see. So for instance, the age, and I'm going to get this wrong, but I know that the average age of Africans, I think if I remember rightly, is sub 25.
By 2050, 50% of the world's under 25 population will be African.
There you go.
I think is the metric.
Awesome.
That may have changed, but
now if you think about that for a second, so that means there's basically going to be, 50%?
Yeah, it's like 4 billion people by that
That's
stage.
huge.
Right? Like massive.
So from a market perspective, not necessarily in terms of a market to serve, but even a market that service will come out of, it makes business sense, right? Now, I'll now switch to why.
And also a lot of those sub 25-year-olds are now emerging middle class, especially in places like Nigeria, Kenya, where they've been able to start really building wealth across all communities.
Exactly. And so tech in Africa is an interesting one because, and by the way, super nascent, very early. We only just started this journey, maybe 10 years ago, if that, maybe slightly more. And the big thing about Africa for the longest time was infrastructure. But if you think about infrastructure for a second, that's heavily reliant on the government. Tech has been a bit of a leveler, a bit of almost like an opportunity for people who may not necessarily have relationships with the government or even have the time to wait it out for the government to put in the policies in place, etc. And they've just gone straight, it's almost like that whole from 0 to 1 thing. For instance, in Africa, we didn't really do landlines. We went straight to mobile phones. There's a huge, everyone knows the story about M-Pesa out in Kenya.
Yeah, I think I've talked about it like 6 times on
because it's relevant because it's like, wait a second, we don't have bank accounts. Oh, but we have mobile phones. Why don't we just have bank accounts on mobile phones? And so again, fine, we might not be banked in a physical institution like a bank.
But are any of us? Right? And equally, I think it's like in Africa, you get real problems that affect real people being solved with real solutions. So again,
absolutely,
it's like, do you need 50-minute grocery? I keep bagging on 50-minute grocery delivery because I really hated it as a thing. But you wouldn't see the emergence of that sort of company really necessarily in Africa. But as an example, Uber and spin-offs of Uber, so you have Border and things like that, where where transport, which is a massive problem for a lot of people. I remember back in 2016, 17, maybe, I was talking to a company called Where Is My Transport from memory. Yeah, right. So, that we're trying to resolve the fact that people in South Africa, in Johannesburg and other cities across the African continent really struggled with multiple modes of transport and how they could plan out their trip. Because if this bus was delayed, they missed this train, which means that they can't get to work, et cetera, right? Because they're often traveling long distances. So yeah, I completely get.
We VCs, we always talk about what problem are you solving? And I personally think, to your point, in Africa, people are solving real problems.
Yeah.
Like, how do you get from A to B? There is no,
That's the most basic
Like,
of problems.
it's so
Yeah.
basic.
Yeah.
How do I get, fundamental education for my child when I can't afford to live close to the school because everything's expensive? I live miles away, but oh my goodness, there's only one bus. So that's twofold problem, right? Transport problem, education problem. If you have a digital way, as an example,
Like Bridge,
to deliver
what is
that,
it? Bridge University.
Bridge Academy,
Academy, sorry, yeah.
et cetera, et cetera. Now, so why Africa? Problems are huge. Population is very young. We've experienced immense growth in tech over the last few years, which is amazing. On the one hand, it's been a huge flow of venture dollars into Africa. I have my opinions on that in terms of whether it's the right money or the wrong money.
I mean, like a lot of the chats that I'm on are like, yeah, we're looking at investing in Africa, but we're looking for businesses doing 2 million EBITDA
Exactly.
and at like post Series C. And I'm like, oh, okay, so you just basically want zero risk.
Correct.
Yeah.
Correct.
Yeah.
Which again, and it's ironic because we're in the venture game. Hello, wake up. If we're in the venture game, we need to take risk. But the good thing is money's been flowing into the continent, which is great. There've been, unfortunately, some mishaps, but guess what? There have been mishaps everywhere. The interesting thing is the media usually, I would argue, accentuates it when it's in certain markets versus others. But
Or certain people.
Or certain people,
right?
or
So
certain
like
people.
the Elizabeth Holmes kind of
Correct,
effect, right?
correct. And then I think the other thing is we've been seeing, so a lot of companies have been raising follow-on rounds, which is good. A lot of companies have exited, which is amazing. Those founders who have exited are now channeling money back into the ecosystem, talking about network effects and the flywheel again, which is obviously spurring the new set of companies and innovators, which is amazing.
Which is what's missing in the UK, to be quite blunt. Right?
Fair enough. And then the other piece is around the funds. So what started as angel syndicates are now graduating to micro funds. Micro funds are now raising their fund twos. So basically, emerging fund managers who've been long on the continent for a while are actually growing up, if you like. Again, it's super early. I mean, the largest fund in the whole of Africa is Partech, Partech's Africa Fund, 235 million, which
That's
I mean, it's
big, but
for
it's
Africa.
not, yeah.
But it's not big. I mean, if you compare that to Europe, it's like, oh, okay, you're a seed fund.
Yeah.
whereas for Partech, that's like literally, it's more like a growth fund actually.
Yeah.
But yeah, so I have a lot of time for Africa. Obviously, I'm Nigerian myself, passionate about the region. I'm long on the region, and I will continue to invest there.
Amazing. Yeah, I mean, like you, I'm Kenyan, although that gets debated by people all the time. I was born there, and would consider myself, and my family certainly considers themselves East African Indians. And I think we see it all the time, right? There are businesses that are being built out there that really are truly innovative, are really breaking ground on something that is affecting people, on the ground. We interviewed Agosa Omoigui on the podcast a few episodes ago, and we talked very specifically about one company where and I think this is the challenge with Africa, especially for people either coming in as investors or people coming in and trying to build in Africa. And the way he described it is like, if you do not have a fundamentally lived experience of the problems on the ground, you cannot build to solve those problems
100%.
because those problems are so unique and are so visceral, right? Like to people, if you haven't actually been through those, if you haven't actually,
You can't understand it.
You can't understand it, and if you can't understand it, you can't build to solve.
Correct.
So I think for anyone that is interested in the Africa scene, I think obviously follow Toyosi, but and others, but there are some really exciting things happening there.
One more point on that, just before we move on, and I said it, but I didn't say it explicitly. Talent.
Yeah.
If we genuinely believe that talent is evenly distributed in the world, then we should be looking at Africa. In any case, a bunch of people who went to study in Europe, went to study in the US, they've now moved back and they're now trying to build companies that can affect the people. And it's a nice segue actually, and to Ascension with our funds, because one thing that I can definitely say about Ascension that I've seen is culturally, everyone genuinely believes that talent is evenly distributed, and that is shown in the, sorry to use the word, but the diversity of the founders that we actually have in the company.
In the company and in the fund.
In the company and in the fund.
Yeah.
Correct.
So interestingly, my sister-in-law, so my cousin's wife, who is African, grew up in Kenya, is now working for a business that's actually based out of Australia. She lives in Australia. That is essentially running apprenticeships for developers out of Africa, and are finding, and what that means is going to US, UK, and other presumably European or certainly English-speaking kind of countries, and placing these developers 3 months free of charge to the business. Thereafter, they kind of have to hire them. What they're finding is actually the quality of the talent is so great that it's a no-brainer, right? And actually, yes, slightly cheaper. I think market forces will play an effect there, and people start developing. But I think that is a massive. There is, to your point, a massive opportunity, because there is talent on the continent. There are other companies that I've seen. Again, I can't remember. I think it was Hyperion Development in South Africa again, which had this really interesting, and again, network effects, right? So it would train developers and then use the developers to train the developers,
the next developer,
and essentially
Very
create
nice.
a flywheel in that way. But yeah, look, I mean, I think again we could talk about Africa
could
for a
talk
long
about
time.
this all day, indeed.
So moving on, right, and kind of. I guess associated with this whole conversation is, we've all heard by now, at least I hope we have, that only 1.87, so sub 2% of venture funding goes to women and minority ethnic or minority led startups. It is still worth repeating that and banging that drum, till the cows come home, because something needs to change. But what about the other side of the table, right? So what is the culture like in VC? As a minority, as a member of an underrepresented community, and what was your lived experience of that?
That's a very interesting question, very personal as well. So I was very fortunate to get into VC, and actually, I mean, most people don't think this probably, but I think anyone who works in venture is fortunate. Period.
Sure. Because
you're basically deciding whether or not you're going to put money into somebody else's company that is dependent on you in a way, and you're choosing. You're choosing,
and you're deferring the results from that choice for like 10, 15 years.
Correct.
Right.
Correct. So that's a very privileged position to be in. So my experience, to be honest, when I think about how I even got into venture, so I post founding the company, went to business school for a bit, started working at Creative Fund. Then I had an internship at Bessemer, and then I got introduced.
Oh, sorry, Creative Fund, not Creandum, as
Yes.
I mentioned earlier. Okay.
Oh, yeah, exactly.
Apologies.
No problem. Worked at Creative Fund, did an extended internship at Bessemer, and then I eventually got introduced to Speedinvest by a mutual contact from Creative Fund. And I focus on that point because when I think back, I think all of my venture gigs were through an introduction.
It's massively relationship driven, yeah.
It's massively relationship driven, which shouldn't be, right? I mean,
it's a warm intro.
So actually,
problem.
So on this point, and people feel two ways about this. It's a bit of a double-edged sword. On the one hand, I think it's unfair that it's that way. But on the other hand, if you go away from venture for a second and you just think about everything in life, you make decisions oftentimes off the basis of trust. But trust usually comes from people you know. And so it's not just a venture thing.
People you know and people that look like you.
That is true.
Right.
Actually, and that's the point.
And this is it's the issue with recruitment. It's been proven time and time again. Like, people will often recruit people that look like them.
Yes.
Right. And to take it a step further, if you think about venture from the perspective of a founder, if you're an underrepresented founder, like, do you want to talk to the 40-year-old white male who doesn't have, who hasn't lived that experience that you've lived, or, hasn't understood what it means to be, a farmer in the DRC or whatever? Or would you rather speak to someone who has lived on the continent, you know, is African by heritage, has understood exactly where you're coming from, and like could regale you with stories of the same thing?
100%.
Right? Yeah.
100%. So I'm going to say 2 points. So I'll first answer the question because I realize I haven't actually answered
That's
it.
fine. Sorry, that's my fault.
No worries at all. So my experience as a VC being underrepresented in venture, and I use the term underrepresented intentionally, as opposed to ethnic minority. Sure. And I'll tell you why. I said this to someone literally just 2 days ago. I'm Nigerian. There are 250 million of us in the world.
Yeah, yeah.
I'm not a minority.
Yeah. It's why I hate BAME as a phrase. Like, I mean, like BAME captures more than half of the world's population.
Exactly. So my experience in venture has actually been, on the one hand, it's been fine because I know who I am. I know my identity. I'm confident in that, irrespective of whether there's a bunch of white males sitting around me. I couldn't care less. Mm-hmm. But that's because of how I grew up. Mm-hmm. I grew up in Nigeria. First half of my life was spent in Nigeria. Mm-hmm. So I don't have an identity issue. Now, the flip side is there are people who haven't had that experience who are not as confident as I am because of that.
Yeah.
So on the one hand, it's been fine for that reason. On the other hand, it's been challenging because, to your point, people don't necessarily see things from my view. Because I'm underrepresented, I can understand a founder's challenge when they're trying to raise capital. I'm willing to give them a shot because I actually genuinely believe, and I've seen the data, that underrepresented founders in general, it's a broad statement, but actually, if you look at underrepresented founders and think about the resilience and the dedication and the fact that, generally speaking, from a founder's perspective, you can't afford to fail.
Yeah.
Or rather, the world's tolerance for you failing or doing something wrong is a lot lower. Therefore, given we're in the venture game, it actually makes sense to back founders that are underrepresented for that reason. And so it's been a little bit difficult over the venture journey for me because it hasn't... 80% of my deal flow is underrepresented founders, whether that's Indian, women, African, Latin American, basically people who are not, Caucasian white male. Mm-hmm. And so because of that, and I've looked at this in places I've worked, etc. When you compare that to what is attractive to other people in a team, mm-hmm. it doesn't necessarily translate. And so what you find is, from my perspective, loads of stuff is coming in, but it doesn't necessarily look like what people are used to.
Yeah.
And then there's a mismatch, which is unfortunate. I think there are a lot of things, a lot of initiatives that are going on to try and correct that, but I think a lot more needs to be done, which is why, for instance, joining, a fund like Ascension where, a lot of the portfolio companies are very varied in terms of diversity. It's weird. It's almost like they don't see it, which is quite nice. Some people have issues with this. They say, "Oh, I don't see color," and some people are like,
you
should see color."
Exactly.
But I don't mean that in a negative sense.
Sure.
In Ascension's case, I actually think they've done an amazing job thus far in balancing the scales for underrepresented founders in general.
Yeah, look, this is a topic. This podcast is not a diversity podcast, right? By any stretch of the imagination. And in fact, essentially, I sit here talking to VCs day in, day out, which is, to your earlier point, like a massively privileged position, both to be a VC and also to have the conversations that I'm able to have, right? So automatically, there is kind of a layer of privilege that comes into play, but one thing that we've been really kind of conscious of I've been very conscious of in building this podcast is to make sure it is representative of all voices, right? Because, absolutely. I remember one of our guests came on, she's not a VC, she's an operator. She used to work with Microsoft. And, she was telling me this story. She goes, this lady got on stage to give a talk to like a group of female leaders. And she was like, she pulled out her phone from the bag. She goes, you can tell that there was no female on the product team at Apple when they built the iPhone, because if they had, they wouldn't have made it black, right? And essentially all she was saying was, if you're a lady, you have a handbag. If you've got a black phone in your handbag, it's really bloody hard to find, right? And like, I'm sat there going, I never thought of that, right? But that's the reality. You don't, right? And you don't think, if you haven't lived that experience, if you haven't come from those backgrounds, it is very, very hard to put yourself in other people's shoes. You can have the empathy for the person, but not necessarily for the problem, because the problem is one that you have to have experienced yourself, right? To really, really understand. So no, I really thank you for kind of being open and honest about that, because I think all too often it's very easy to go one side or the other. You know, it is always a nuanced debate, right? There is a case to be made for, you know, everything is shit and we need more money to go into underrepresented founders, et cetera, et cetera. The flip side is you get a lot of people, again, because they aren't necessarily massively aware of their privilege, will say, well, there's no problems because look at me, I am in venture, so therefore it must be fine, right? And I think it's balancing out the fact that yes, you can have privilege, but you can also no,
100%. And to be honest, I mean, I always say to everyone, right, like, if I can be in venture, you can be in venture. In other words, what I'm saying is I think people have a responsibility, especially those of us who are privileged and underrepresented at the same time. We have a responsibility to others who are behind us, meaning coming after us.
Yeah, don't pull the ladder up behind
correct,
you.
Correct. But oftentimes we're also guilty of that.
I also think there's another thing at play here, and just like this, actually good kind of segue to the last question, right? Is the other thing that's in play is that as underrepresented people ourselves, we almost have we almost have a higher bar. It's exactly what you said earlier, right? The world's tolerance for failure as an underrepresented founder is low. That's exactly what it is. Like you push harder on those people because you also can't afford for them to fail, right? Like, it's a bit like, at the moment, I've said this all the time, like with emerging managers and emerging funds that are coming out, and a lot of them are backed by underrepresented, or not backed, sorry, have been led by underrepresented fund managers. Like, if those funds don't have great outcomes, what's that going to mean for the next vintage of emerging managers that come up and try and raise thereafter? So I think there is a lot at stake and a lot at play. And with that in mind, and as we wrap up, what advice would you give to people from minority ethnic backgrounds or from underrepresented backgrounds, exactly as you said, who are trying to break into venture today, whether on the investing side or on as founders, I guess?
So investing side, I would say, actually both. Leverage your network. Now, when I say this, a lot of people might go, yeah, but I don't know anybody. We have LinkedIn, right?
It's so easy today.
Like, so I personally think it's lazy when people don't try. What's the worst that will happen? You reach out to someone, they don't answer you. But what you find is that like recognize like. So if someone approaches me and says to me they're trying to get into venture and they're underrepresented, I would probably answer them. Yeah. Because I was once there. Now, maybe not everybody would, but hopefully more than 50, 60, 70%.
Well, most people, I think, like giving advice and telling their story. Like,
there you go.
Yeah.
Because that's all you're asking them to do.
Yeah.
So reach out, ask how they did it, ask if they can help in any way, any intros, because that's what happened to me. I spoke to so many people. Now, the interesting thing was when I wanted to get into venture, I didn't ask them to get me into venture. I asked for their advice. Yeah. And what happens is they then introduced me to somebody else that would give me advice, and so on and so forth. And then they started sharing things with me. Oh, this company or this fund is looking for a role here. I know the person who's recruiting. I'm happy to put in a good word. Why? Because they've heard my story. They've got to know me a little bit, albeit not intimately. And so they can essentially vouch for me. Remember I said that thing about trust? Good. So that's that. On the founder side, same thing. If you want someone to back your company, and this is how I do it. And by the way, I do this for jobs as well. If I see a job, first thing I do is, who do I know that is in that company? If I don't know anyone, who are they connected to that I'm connected to? And then I reach out to that person. Can you introduce me to Arish at Nothing Ventured? I just saw that they've advertised for a role. I'd love to interview. Do you mind introducing me? Now, that person, if they trust you, they'd be happy to intro you.
Yeah.
Which is talking about the power of relationships, which is a whole different conversation. But similarly with founders,
network effects at play.
Exactly, more network effects at play. But going back to the founder point, I think if you want a fund or an investor to back your company, try and get an intro, because it's the trust thing. Of course, we all have like the open applications to apply on the website. Do that, but also do the intro, because then yours gets to the top of the pile. I always use this example for jobs. For every job, there's 200 applications. How is a recruiter meant to go through 200?
In the bad old days, there was this whole, it's probably a bit of an urban myth that recruiters or HR managers in firms would just look at envelopes. If they were brown, they throw them out. If they were white, they keep them, or vice versa, however you want to think about it. But this is the crazy thing. And I think it's why I have a lot of, I lack a lot of empathy for people who like jump on all of these kind of, here's a list of 300 VCs in Europe that you are like, what were you doing before that list existed? Like, were you not able to go on LinkedIn, do a Google search, use ChatGPT now, which makes it even freaking easier?
Yeah.
Or to your point, right? Look around. And yes, okay, not everyone is going to have a direct relationship, but there is a sort of 6 degrees of separation thing at play here. And ultimately, in both venture as well as in founding a business, you are looking for people who have the ability to overcome some form of adversity, right? Who also, I hate the word, but have hustle, right? And ultimately, it's a bit like VCs waiting for inbound deal flow. Like, I have some sort of questions around whether scout programs are really that valuable, because ultimately a VC's job is to find great deals, right? And that means going out, looking, going to the events, talking to the founders, figuring out who's in the space, doing what. And so whether you're a VC or a founder, you've got to be doing those activities.
100%, right? 100%. So my advice is very simple. Leverage your relationships, do your homework. And when I say that, tailor your outreaches to what you like. So I liked marketplaces. Look for marketplace investors. Don't do a scattergun approach. The reason is you're not going to be passionate enough talking to someone who is only interested in fintech if you like marketplaces. Just as an example, same thing with founders. If you're trying to find someone to back your company, don't go after a fund that, don't just send cold emails.
Yeah, don't go to Notion if you're a pre-seed business.
Right?
Like,
yeah.
Well, actually, you could now.
You could now. Everybody does pre-seed.
Everyone's got a first check fund, yeah.
But yeah, just do, relationships, do your homework. And, as Arish said, hustle. But it's definitely possible. If I can do it, I guarantee you can as well. Might take a while, but that's okay. Trust the process. Just keep going. You can do it.
The way I described it, I wrote a whole Twitter thread about this, right? Like, I built relationships like 6 years before I needed to raise money, or before I even thought about raising money, right? Like, if you have in your mind that this is something you want to do, like, don't wait until you need to raise the money. Like, start building those relationships early.
100%.
And don't ask anyone. And actually, I've got a really great example of this. I had someone send me an email, and I was like, okay, I don't know who this guy is at all. But like, the thing was, like, I've been listening to the podcast. I really love it. Thanks for doing it. I'm like, okay, cool. Yeah, thanks. And he's like, I'd love to have a chat with you about what I'm building. I'm not looking to raise investment right now, but, would you be interested in having a chat? I'm like, well, I'm not sure. I'm going away for a little while. And he sent me, he then sent me his kind of one pager. And actually, I read the one page. I was like, oh shit! I actually wanted to build something like this myself in the past. And essentially, it's like an Airbnb, but specifically focused on people that want to work remotely, right? So the problem with Airbnb, and I've suffered this over the last 3 years. I'm very fortunate. I'm able to spend like a month or 2 months in Italy, or a couple of weeks in Spain, or do and work remotely. But every Airbnb I've gone to has suffered from one of two things. Either the Wi-Fi is absolutely awful, which is often the case, or there's no like decent working space, or you've got the surrounding sort of noise and whatever. And what he is building is essentially, spaces that you can go to and experience that. And essentially, long story short, I'm going to have a call with the guy because I'm like, actually, yeah, I really like this business. The idea of the business, it's a problem that I have. And again, going back to the kind of solve the problems that, you have and be interested in things that you've been, you've experienced yourself. And if I can help in some sort of way, I'll help. But, the fact is he reached out, he wasn't looking for investment. Yep. He wasn't even looking, like he just wanted to pick my brain a little bit about the B2B model that he wants to launch. I'm like, yeah, actually this makes sense for me to have a call.
100%.
So Toyosi, look, it's been absolutely incredible having you on the podcast. I'm so glad we were finally able to get this done.
Likewise, it's been a long time in the making.
In the making, for sure. And for our audience, where's the best place for them to find you online? You're on LinkedIn, you're on Twitter?
Yeah, absolutely. So on LinkedIn, just Toyosi Ogedengbe. I know it's a bit of a complex name, but once Arish posts it,
we'll put it in the show notes.
You'll see how to spell it. Reach out to me on LinkedIn, and then also on Twitter. It's at the Black VC.
Yeah. I think that's the reason I wanted you on the podcast, to be honest. I just love that handle. But listen, Toyosi, it's been an absolute pleasure having you here today.
Likewise.
Thank you so much for joining me in the studio.
Thanks for inviting me. Love
Amazing.
Take care.